Welcome to Breaking Bread presents Fibs in Your Future. In this video, I will break down how to use the Fibs to trade futures and how you can use them to be successful in your trades. Like always, we begin with a disclaimer. This video is for training purposes only. I am not a financial advisor. I'm just sharing with you the tools and ideas that I use when I day and swing trade, so you assume all risk when placing your trades. All right, Fibs in your future. What we gonna talk about in this video? Well, I'm gonna tell you. We're gonna do a quick fib refresher. I'm gonna talk about the levels of interest. I'm gonna dive just a little into futures. I'm gonna talk about when to take the trade. We're gonna compare A plus, B plus trades, when to exit those trades, and then I'm gonna take it to the charts, which is my favorite part. All right, so before I begin, I do want to state that the information that I am sharing in this video, I know the focus is on futures, but I want to state that this works with whatever you like to trade and on whatever time frame you trade on. Say it again, Mo. I got you. This works on whatever you like to trade and on whatever time frame you trade on. So don't limit yourself. All right, so let's get into it. Now, I'm making this video assuming that you already know how to use Fibs. If you're not familiar with Fibs and don't know what Fibs are, I suggest you take some time out and go watch my Fib video in my channel to where I break down Fibs in full details. You have time, go ahead and do that. But let's get into this Fib refresher. So I want to talk about how to connect your uptrend Fibs and your downtrend Fibs. So to connect your Fibs on a uptrend, when price is in the uptrend, you're going to connect from the lowest low, which is the bottom of this wick, before price starts making its way up, to the highest high, which is the top of this wick, before price begins to pull back. So that's the swing low, swing high, lowest low, highest high, wick to wick, watching what price does at our fib levels to the right. That's how you measure an uptrend. Now, when price is in a clear downtrend, this is how you connect your fibs. You're going to go from the highest high to the lowest low. Highest high before price begins to go in this downtrend to its lowest low, and we're watching what price does to the right. So that's wick to wick, swing high, swing low, top of this wick, bottom of this wick. We're watching what price does to the right. So that's how you connect your fibs in a downtrend. Now, for the purpose of this video, the levels of interest that we're going to focus on is the 50%, the 61.8. Those two are your golden zone. And my favorite level, which I call that 78, and I call it my last line of defense, is the 78.6. The 50%, 61.8, and the 78.6, those are the levels that we are going to focus on in this video. Futures. Futures trading involves the buying or selling of contracts known as future contracts. These contracts obligate the buyer to purchase or to sell, or the seller to sell at a predetermined price on a future date, hence the name futures. Though my focus of this video is not a breakdown fully of what futures is, I do want to touch on the two that I like to trade, and that's ES and NQ. ES, which is your E-mini S&P 500 future. I like to call this one the parent of XPX and SPY, meaning if ES is doing it, then SPX and SPY is more than likely right behind doing it, about to do the same thing. But ES holds the top 500 companies in the US. Now, NQ is your E-mini NASDAQ 100 futures, and I look at this one as the parent of QQQ. Meaning if NQ is doing it, more than likely QQQ is going to do it as well. So this one holds some of your top tech and biotech sectors. All right, so when to take the trade. It does not matter what time frame you trade on. The objective is to wait for price to pick a clear direction, and then you wait for price to give you a pullback to your fib levels to buy contracts at a discounted price before it begins to head back in its original direction. Now, for me, this is only me. I trade on the 1 minute time frame and up. Which time frame I decide to draw my fibs on depends on what price is telling me. So what does that mean for me? So that means, let's say you have price in a clear uptrend one day on the higher time frames. We're just up, 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 up. Strong candles to the upside. Now we know that price don't go straight up or it goes straight down. So this is when I drop down to the smaller time frames to catch one of those mini pullbacks, and I'll put my fibs on the 1 minute, 2 minute, 5 minute to get me into that play to the upside. So that's why I say it depends on what price is telling me on the higher time frame. If it's a clean play, then I'm gonna have to drop down to the smaller time frames to get in that play. Now, easy way to spot who's in control is waiting for price to pull back. So if price pulls back to the upside, then we know sellers are currently in control. If price pulls back to the downside, then you know that buyers are currently in control. Also, before I move on, I do want to state that when I'm trading futures, I do have one chart with extended hours on and one with extended hours off, but you can do what you want, but it's just that I like to see the gap, so that's why I have it set up that way. All right, so I think this is NQ on the 5 minute time frame. So who's in control? So based off this pullback, we see that sellers are in control based off this pullback. So connecting the downtrend, we go from the highest high to the lowest low. Now you can connect to this low here. You definitely can. But you just want to make sure it's the lowest low before price begins to pull back. So highest high, lowest low, we're watching what price does to the right here. So we're waiting for price to pull back, get to our fib levels, and give us some type of reaction. What do I mean by reaction? Reaction meaning that price gets to your fib levels and it starts to give you these long wicks like you see here. This is what you're looking for. Like you start to see these long wicks at your fib levels. That's what you want to see. That's the reaction that you want to see to signal you to say, hey, this is possibly just a pullback. We're going to head back in the original direction. So that's what you want to see when prices get into your fib level. You want to see price respect your fib levels. So that's what I mean by respecting it. It's getting to your fib level. It's giving you a reaction. And it's telling you, hey, this might head back in this original direction. Now, when I say price is disrespecting your fibs is just, it's busting through. It's not caring that your fib level is there. And then this is, in this example, is creating newer highs. Right? So that's what I mean by disrespecting your fibs. I also want to note in this example, and this is why I keep my fib on, is because if you look here, price came up to this level once, rejected it, and then it came up again, rejected it. So until price disrespects my levels, like I said, just breaking through, creating newer highs in this example, then my fibs are staying on this chart until price disrespects these levels. But as long as price is respecting this level, my fibs are staying on this chart. Because I am to assume if price already came up here one time and rejected this level, I'm watching to see if price is going to do it again the second time. Price has memory. This is clearly a strong level. If you look back, even the pre-market, that's clearly a strong level. So until it disrespects my levels, fibs stay on my chart. But do as you feel. All right, so A plus and B plus trades. A plus trades to me is when your fibs align within an area of confluence. The B plus trades is when you have little to no data to support your bias. Now, I call it this because I dislike when people get in trades and it goes against them and they feel like they did something wrong, though everything aligned in their favor, but the market just did what it wanted to do. And now they're beating themselves up because they feel like they did something wrong. But in all actuality, the market was just doing what the market wanted to do. There is no right or wrong in my eyes if price is aligning in the area with strong confluence. The only thing we can do is trust the play will play out in our favor. If it does, it does. It doesn't, it doesn't. We'll just move on to the next play. All right, so an example of an A plus trade, and this is what I want you guys to look for within your strategy and whatever you use to read price action. So as you can see, clear downtrend. The sellers are clearly in control based off this pullback. So that's the highest high, lowest low. We're watching what price does here to the right. As you can see, price came up to our 61.8. This blue line is our VWAP. This purple line is our SMA, our EMA, I believe. I don't know. I don't use them. I just threw it on here for the example. This purple line is what I use. This is the broad information because I trade the scrap. The straight purple line is the previous level of support and resistance. So this is what I mean by area of confluence. You see how you have all these different indicators that's helping you read price action aligned with your fib level and prices rejecting off of that. That's what you want to see. And that's what I call an A+ setup. A strong area of confluence. Like you got it. Everything. Now, granted, this is a bit OD, and I'm not telling you to put all this on your chart, but I am just showing you it doesn't matter what strategy that you use. What you are doing is trying to build a case for you to take this play back to the downside. And when you have all this in your favor, how can you not take this back to the downside? So again, I'm not telling you to put this all on your chart. I definitely do not have all this on my chart, but you feed you. So do what you want to do. And as you can see, price came back here the second time. Same thing. Ran into the moving average. VWAP didn't really help in this situation. It did run into the support and resistance line, and since it didn't reach my broad information, it stretched but didn't reach. That's it, respecting it in my eyes. So I would again trust this back to the downside. But like I said, you don't need all this on your chart, but I'm just showing you it doesn't matter what you use. What you're trying to do is build a case for you to believe that this is a pullback to take this back to the downside. All right, now, so a B+ trade. Now your B+ trade is your trades that doesn't have that much confluence on your charts. So as you can see, price came back up to this 50% area. It gave you a reaction, so it rejected, and then it started to pull back away. Now, what you do have in your favor, if you look to the left here, this was a previous area of support. It gave a little bounce right here before. So you can treat that as an area of support if you want to. Your SMA and your VWAP really is not helping you in this situation. My broad information, I don't have one, but it clearly ran into something. So this is a play, what I'll call a B+ play, because it's not a strong area of confluence. Now, I would never tell you when you should take a trade or not take a trade, but what I'm saying is that a B trade can be more profitable than an A+ trade. It definitely can be more profitable, because here you can see this would have paid if you would have took this. This definitely would have paid. But if you are someone who's dealing with entries or having a hard time just trusting your setup, then you want to wait for price to enter an area with a stronger area of influence. And when price presents the opportunity, you execute. But I'm not telling you that you can't take B+ trades, because you definitely can. I do. But if you're a person that's struggling with that entries and trusting yourself, then just stick to the stronger performance plays. All right, so exit. Your exit depends on you and what you are trying to accomplish in that trade. But an example of where I would exit in this situation, you see a clear uptrend. So we're going to connect from the lowest low to the highest high. You're watching what price does at our fib levels here. So our goal is for price to come back up in this original direction and take out these highs that it was created. So you want to take out these lower highs that were created. That's our goal. But again, you have to read what price is telling you, because price does not have to go up here and take out these highs. It could just play around like you see it did here until it eventually took off. But you have to read what price is telling you, because it can just go up here, take out the one high, and turn back around and go back down. So just play what you see. At the end of the day, just play what you see. So that's how you would do it for an uptrend. Now, downtrend, the reverse, of course. High is high, low is low. You're watching what price does here to the right. So our ultimate goal is, once price respects our fib areas, we want to come back down and take out these lows. But this is why you play what you see, because you see price broke through the 61.8. Next day, it just played around in this range until it started to come back down and take out those lows. So when you exit, it's totally up to you and what you're trying to do. But our ultimate goal is to always come back down and take out, in this situation, the lows that were created before the pullback. All right, so let's take it to the charts. My favorite part. Take it to the charts. All right, so we got that up. All right, so I want to show you guys NQ. I had fun this day. I promise you, like, I was in this place so much. All right, so this is NQ on the 5-minute time frame. I'll show it to you on a 5-minute time frame. What I do want to turn on though is your moving averages real quick. I know some people use those, so I'm gonna turn it on. Now, I think people use the 21 and the 50. I think, not too sure. It's been a while since I used the EMA. So yeah, so that's gonna be my EMAs. Then let's turn VWAP on. I know people still use that. VWAP, let's turn these bands off. Let's make our VWAP white. High. Boom. All right, so let's look at this play that I took on NQ. So I missed the open. So as you can see, clear downtrend, price begins to pull back. So since I see prices pulling back to the upside, then this is telling me sellers are in control. So I'm gonna connect my Fib from the high to the low. And I'm watching what price does at my Fib levels. Now, as you can see here, this level, this area, this area, right? Price got to those levels 3 times, attempted to go take out the high and make this a reversal, but it never did it. But it pulled down, got to our Fib level, it broke through our 50%, it got to our 61.8, it gave us the reaction that we wanted. And as you can see, it ran into one of our moving averages. It ran right into my Barnett formation. It didn't quite touch the VWAP, but it reached towards it. So that's it trying, and it doesn't want to. And then if you look to the left, it aligns with a previous area of support and resistance. More so resistance. But if you look to the right, that's what I'm sorry, to the left, not the right. If you look to the left, that's what you see there. So let's put that on the chart so you guys can see it. And this is why I like looking at pre-market data, because that same area it ran into at pre-market, it does it again when the market is open sometimes. All right, so this is the previous level of support. So as you can see, this is a strong area of confluence. It ran into our Barnett formations. It gave us the reaction that we wanted. So this is where we're going to look to take entry on this play. Play this back to the downside. Came back up, did it again. Another strong area of confluence. It ran into, this time it ran into the VWAP. It reached out to our Barnett formation, didn't quite get there, but it did run into our resistance level. And then it headed back down. Did it again for the 3rd time. You would think you're thinking, okay, it's gonna break through this time, but it didn't. It ran right into what I call my last line of defense, 78.6. It ran into my Barnett formation. It got above the VWAPs and the EMAs. It also busted through the support and resistance level. But if you look to the left during pre-market, what did it run into? This is why I have it on. Look at that. Ran right into it. Most would have thought it was about to break out 2 tries. I mean, most would think that this is the time it's gonna go take out the high, but it didn't. Ran right into my broad information, previous level of resistance, 78.6 level. Take that back down to the downside. I had fun this, man. This was nice this day. All right, NQ on the 5-minute. Let me show you. I think it was Friday. Friday? I think it was Friday. I wasn't able to. I caught this pre-market move, but I didn't catch this end of day drop. All right, so this is the, let's look at this. I think this is the 15-minute one where it was just clear. This is where I say you got to drop down to the smaller time frame. So if you look at this, this is a clear buyers are in control this whole time. It really gave no pullback for you to catch on the 15-minute at least. It didn't give you a clear pullback. So this is where I say you got to go down to the smaller time frame if you want to get into this play to the upside at least. So you want to go down to the smaller time frames to see if it's going to give you a pullback to get into this play. And it did. If you look here, this is a pullback candle. This is pullback. This is pullback. So it's totally up to you where you're at in this play at the time. It's pulling back. But you can see it got to the 78.6. And it's not a strong area of confluence here on this time frame, but this is what we call a B plus trade. But if you want to take it, take it. Take it. Let's say you missed that one and you want to get in this one. Let's see what it does when you connect it from that low to that high. What did it run into? It ran into the 61.8. Take it, B plus trade. But you know who's in control. At least you know that much. That's totally up to you if you want to take it or not. But this is when you want to come down to the smaller time frames, when the higher time frames is not. The higher time frames is giving you a too clear of a picture, I guess you can say. So then if you look at it, it came down, it created a new low. So the low for the low for the day was here. Put a purple line here so you can see it. This was the original low of the day. It came down and broke it. So now we know that buyers are no longer in control because we created a newer low. So now we want to measure this pullback right here. So we're going to go from the highest high before the drop to the lowest low. And we want to see what price does. What did price do? Ran into our broadening formation, the 50% fib level. It ran into that. So this is the area of confluence. Yeah, so this is the area of confluence. So this is where you would look to get into this play based off your strategy. Now the EMAs and the VWAP didn't really help in this situation. So I guess you would go with God on this one, if that's what you use, or hopefully you have something else that helps you in this play. But it rejected, so you trust this to the downside because they already created a newer low. So trusting this is to be a pullback to the downside. Another thing you guys want to be careful of with NQ and ES is that you'll get the confirmation it rejecting off the fib, but it will play in a range before it breaks out of it. What do I mean by that? You look at this play right here. Look at this range that was created before it took off. So you want to wait. You really should just wait until price breaks out of this range, because this range, this bouncing around in this range, will probably scare you out of your play. No, it's no theta when you're playing futures, but don't give away money allowing them to scare you out of a play that you know is about to come down, but it's playing around trying to find stop loss. I tell you, NQ will always find my stop loss. It's amazing to me. It's like someone tells them. But once price break out of this range, that'll be your better entry for NQ and ES. It's gonna do this sideways movement before it breaks. So just wait for that. Wait for that. Now let's go look at ES. All right, so ES, let's look at it on a higher time. Let's say 30 minutes. Let's look at it on a 30-minute time. All right, so here you see that buyers were in control for first half of the day until the new low was created. So you throw your fib on from that high to this low, and then you watch what price does here. Again, it rejected this broadening formation and my 61.8. So we could have played this down to the downside. But let me show you what this looks like with pre-market off. Like I told you guys, it works with it on or with it off. It doesn't matter. It's gonna respect the level. Same thing. Boom, high, low, ran right into it. Like I said, it doesn't matter if you have it on or off. I just use it to see what pre-market is doing. Then I have it off so I can see the gaps, the gap up, the gap down. But like I said, it works on any time frame. You're seeing price approach 50%, 61.8, that's 78.6. You start to see these long wicks once it's getting to those levels, and you find an area of influence, then trust that play will play out in your favor. All right. Hope that helped seeing it on the actual chart. All right. So like I always do, I have to touch on your mindset because I feel like trading, the most important part of trading is your mindset. And I just feel like we don't focus on that enough. But quitting is not an option. I repeat, quitting is not an option. We can't say that we really want to do this and become profitable traders if we can't handle the storm that is going to take for us to get to become profitable traders. If you say you really want this, then you have to trust the process that you have to go through to become the profitable traders that we want to do. Now, if this is not working and you just feel like every day is the same over and over and it's just repeating history, then try something different. Now, I'm not telling you to go find a new strategy. I'm definitely not telling you that, but maybe it's something technical that you can do that'll help you become the trader that you want to be. So let's just say you always get smacked at open because you take plays at market open. Stop taking plays at market open. Just stop taking plays at market open. Wait for price to pull back. Like I just showed you guys. I just showed you every example was a pullback play. So wait for price to pull back, get in at a cheaper price, and trust that setup. If that's what you need to do, become a profitable trader. But maybe it's something that you need to tweak on that end that's preventing you from being a profitable trader. But whatever you do, quitting is not an option. I promise you, we are all so much closer to where we want to be. We just got to keep trusting the process and keep putting in the work. And I promise you, it's going to pay off. And like I always say, it's either going to work or it's going to work. That is the only option. And I trust that for us all. Quitting is not an option. So remove that from your mind if that's what you're thinking. All right, so some quick tips before we get out of here. Who's in control, buyers or sellers? You should know this before taking any trade, but you want to know who's in control. And you know this best if you would just patiently wait for price to pull back and tell you who's in control. If price pulls back to the upside, then we know that sellers are in control. If price pulls back to the downside, then we know that buyers are in control. The levels of concern that we spoke about was the 50%, 61.8, and the 78.6. Those are the levels that you want to see price give you some type of reaction at. Now the time frame, like I told you, I use the 1 minute time frame and up, but it's based on what price is telling me on in that trading session. But you can use whatever you would like. Now A plus trades and the B plus trades, like I told you, it doesn't really matter which one you take. There's risk involved with all trades, A plus, B plus, C plus, D plus, whatever. There's risk involved in all of them. But the more confluence, the more confidence you should have to take that trade and to trust that setup, especially if that's, like I said, that's something that you're battling with is entries and trusting yourself, then wait for that A plus setup, which is the area that has a lot of confluence aligned with your Fib levels. Being patient, right? We letting price come to us. We're not chasing price. So as soon as price pulls back and we confirm that it's a pullback, then we get in a contract and we execute that play and hopefully it play out in our favor. If it doesn't, it doesn't. If it does, it does. We treat them both the same. But we just got to be patient and let price do what we want it to do. And last but never least, is quitting is not an option, period. All right, so we have come to the end of this video. I hope this information that I provided in this video will assist you some way along your trading journey. 2024 will be our winning seasons. Quitting is not an option. If you have any questions or comments, feel free to drop them in the comment section below, or you can DM me and I will get back to you. But until next time, I thank you for breaking bread with me. You guys stay blessed.